I'm going to show you guys how to predict the smart money reversal of a market maker buy model, and then also trade the accumulation and reaccumulation legs. You can see currently I am in a trade on the micro E-mini NASDAQ. I'm 7 contracts in, looking for price to deliver to this level of buy side liquidity. So first we're going to be diving into how I got long all the way back down here. You can see that I did buy in this area. This was a total of 8 contracts, then sold the 8 above this level of buy side liquidity. So I'm going to be walking you guys through that, and then also what to look for when price is in the middle of the range. I know a lot of people are confused. How do I get in up here without having a massive stop? I'm going to be teaching a little bit of the change in the state delivery model, but we're not going to get too deep into that because I do have a 7-day series in my Discord that I'm doing right now. From January 7th to January 14th, each day I'm releasing a video how to trade ICT concepts from beginner to advanced, and I uncover my personal trade model. So you could see that price was just consolidating in here, but then I end up buying right when price starts to expand higher. Now, how did I know to buy right here and sell above this high? Like, what's the logic behind that? Well, if we look at the 30-minute time frame, you could see that price took out this level of buy side liquidity up here. And remember, price has been bullish in here. So remember, price returned back down, traded into this order block, expanded far, far away from that, took out the buy side, but price delivery is still bullish in here. So if price returns back down, right, order flow is bullish. How do I know it's bullish? Well, down close candles are being respected. So price returns back to this order block, respects that, expands away from it. Notice how it's returning back to these down close candles, supporting the idea that order flow is bullish. Okay, we have this down close candle on here as well. It's just constantly giving feedback that order flow is bullish, right? Down close candles are being respected. Bullish PD arrays are being respected. So when that's occurring and we're getting that sharp displacement higher, when price returns back to a level of sell side liquidity, this is an area where I'm potentially hunting for a model to play out. There you can see I just got filled, and I'm actually going to share my executions on this. If you guys did see my stop loss up here, it was a little bit trailed. Originally, this is what the trade idea looked like. So let me turn on the executions. You can see that 746 was my entry. So I did get filled a little bit high. Got in right there. Stop loss beneath this low. Now it was pretty close. Let's see what the RR is on this trade. This is about a 2R trade. So with my risk strategy, I can do as low as a 1 to 1.5. This is a good medium point. So when price retraces back down, it created that change in the state delivery. I'm going to refer back to this in a second, but we created this fair value gap, and this was the original stop placement. Once it expanded away from that, I did trail the stop up. I don't want to get too off topic though. Let's move back to what we were previously just talking about. Again, order flow is proving it's bullish. It returns back down to a level of sell side liquidity. Remember, if order flow is bullish and the algorithm is constantly offering higher prices, when it returns beneath sell stops in a buy program, it's just going beneath those sell stops to what? For smart money, to buy the sell stops and then revert back to the buy stops. So this is when I start to compare ES and the NASDAQ. As you can see from this previous low down here, price makes a higher low. But if we look at the S&P 500 chart on the right hand side, so we have the S&P 500 on the right, NASDAQ on the left, this makes a lower low. So we have a cracking correlation between correlated assets. When you get this at a predefined level where you anticipate a potential reversal at, what's that? Everyone says that about market maker models, okay? It's a level where you anticipate a reversal. How the heck do you know that? That's a good question. Well, if price is in a buy program, sell stops is a predefined level that I already have marked out, and if price takes out that level of sell stops, right, and order flow is bullish, that's an area where I can hunt for a market structure shift and look for a SMT as extra confluence. I'm not looking at SMT alone, but I'm looking at it as an extra confluence. So we get that, right? Price creates this SMT divergence, starts to trade back higher, and then what we get here is we get a lower time frame. So I was utilizing a lower time frame chart in here. So if you look at like a 30-second, we do get you could call this a market structure shift right here, or the change in the state delivery occurred right here. Typically, I will wait for price to break through this high up here for the market structure shift. But when there is SMT divergence, the one that creates the higher low, this is enough right here for it to just make a short-term high, break lower for a second, and then retrace back up, creating a bullish fair value gap. That's enough in this example. Normally, if there was an SMT, I would wait for it to take out this high. So we get a change in the state delivery, right? My entry is over here. So I don't get in right away. I was kind of waiting for the algorithm to prove to me that it wants to be bullish. Price starts to expand higher. If we look back to the 1 minute, okay, price starts to expand away from this. Now notice, this is super important here. This is something you want to write down. Notice how the NASDAQ makes the higher low and the S&P 500 makes the lower low. This one is going to be stronger to the upside. Notice how I target that buy side over there. But then if we look at ES, notice how it hasn't purged that buy side at the same exact level. So if I draw that same exact level out, notice how ES is lagging behind. That's what we anticipate. The one that creates the higher low is showing a failure to go lower. It's the cracking correlation, and it means that smart money's unwilling to engage the sell stops over here. And if they're unwilling to do that, it's going to be faster displacement towards the buy stops. That's why I chose this one to trade. Okay, so let's go back to the example over here. Dan, where can your stop be? When price starts to trade higher in here, and I'm entering off of the lower time frame. Now I'm using a 30-second chart, but you could have utilized this without a 30-second, right? You can see that price creates a, if you were really looking for a market structure shift with a fair value gap, this would have to be the price leg right here. Again, I only refer to this when there's SMT divergence. Normally, this would have to be the market structure shift level. So price creates the change in the state delivery right here. So it starts offering higher prices, creates a bullish fair value gap. This to me indicates that all of this engineered liquidity from the left side is likely to start getting engaged. And the reason behind that is we're at sell side liquidity. Order flow has been bullish. It created SMT and it created a market structure shift. This is all you need. So once it does that, right, I start to buy 2 down here. Once we get more confirmation in this wick, I am buying some more, kind of pyramiding an entry there, and then I'm selling all 8 contracts right at the buy side liquidity. Now price starts to consolidate in here. When price is above that buy side liquidity, right, this is an area where you can get some consolidation. This is going to be the low risk buy down here. Okay, so the low risk buy is going to form over here, and then once we get this retrace in here, this can be the accumulation leg of the market maker buy model. And then once price reaccumulates or retraces back down, this can be a level of reaccumulation. I got in on the reaccumulation. A big problem that a lot of people run into is once this happens right here and price is in the middle of the range, they're waiting for a retrace all the way back down to long a discount fair value gap before price expands to the upside. And I know some people are thinking to themselves, that's exactly what I was doing today. So a lot of the time I am not waiting for that because I know what a market maker buy model looks like. Price has an original consolidation. It moves away from that original consolidation, engineers liquidity. It creates a smart money reversal. This is the low risk buy. Price expands higher, and price does something like this until it takes out the liquidity higher. So I'm not anticipating for price to retrace all the way back down to the low risk buy unless it's in a high resistance liquidity run where it's just consolidating. And if it's consolidating, I don't even want to engage with this model. So I'm not anticipating for this to run all the way back down deeper. I'm anticipating for this to return back to a fair value gap or an order block or a breaker on the accumulation leg. And then on the reaccumulation leg, I'm looking for it to return back into a fair value gap likely before it expands for that original consolidation over there. So this is what a market maker buy model looks like. Now, if we take a look at my entry, so not only am I looking for a return back to a PD array, but I'm looking for a return back to just some minor level of sell stops from the left side, which we get right here. And then I'm looking for expansion away from that, breaking above this order block and creating a fair value gap. Once we get that, that's enough for me to long, okay? And your stop could either be beneath this low or beneath the low of the candle number 1 of the fair value gap, which is where my stop was, okay? So this is a valid change in the state delivery, and we're going to be targeting the buy side liquidity. So again, like I said in the beginning of this video, this was around a 2R trade. So you could have a lower stop. This would be the safest stop, but not really the best RR here. This would be an okay stop beneath that fair value gap, candle number 1 low, and then target the buy side liquidity above. So that's how I can get in the middle of the range utilizing accumulation and reaccumulation legs of the market maker buy model. So that's going to be it for the NASDAQ. Let's take a look at the S&P 500. Utilizing the same logic in here, that this was the low of a smart money reversal and price was going to target the engineer liquidity above. Now, you don't always have to be targeting the extreme high of the range. When I'm seeing these SMTs form at potential smart money reversal levels, I could just target these levels of liquidity in here. So I was utilizing that logic, that price create the SMT on NASDAQ and the S&P 500. It created a market structure shift higher right here with a fair value gap. So now I'm looking for price to start attacking the buy side liquidity. So when price pulls back down into a discount, it takes out a low. When price is in a buy program, it's only taking out lows for price to move higher. So I buy in here. So I buy one, then I buy another one right there, and I take off at this level of buy side. So then when price starts to consolidate in here, I'm buying again in the accumulation leg of a market maker buy model, really looking for this fair value gap to act as support. It does trade a little bit below it, but my stop was safe there. Price starts to trade higher, takes out the sell side liquidity, and then it starts to expand higher, creates a change in the state of delivery. I did alert this to Discord members. Price retraces back down and then starts to expand back up. So at this point, when I'm buying in this order block, I'm trailing my stop to right around this area down here near this low. Because at this point, I don't want to see it return back lower because it already took out the sell stops and expanded higher. So I want to show you guys how I did alert this to Discord members today. You can see on the S&P 500, I said I am interested in seeing those perfect equal highs get taken out. They were just way too clean. You could see that price started to expand towards there. I said we have a 1 minute change in the state delivery, a lower time frame model out of a higher time frame fair value gap. We have two sets of perfect equal highs. Seems likely to take them out. So we had a change in the state delivery, looking for this buy side to get engaged, and you can see we do get a nice pump back up higher. Here, while I'm in the Discord, I'll just show you guys, here's the 7-day series so far, where I'm releasing how to trade ICT concepts from beginner to advanced. You can see episode 1, basic PD arrays I use, episode 2, the model, episode 3, finding the draw on liquidity and aligning with order flow. That's something you're interested in, check out the Discord link down below. There's a 3-day free trial. So moving back to the S&P 500, right, I'm buying this accumulation leg, targeting the buy side over here. Now, though it can trade higher and target all of these highs and starts to even trade higher, I don't care about that because the RR is already good enough for me to just take off at this buy side here. So when you're trading these market maker buy models, don't think that you always have to hold for the original consolidation like we have up here. You don't have to, right? You can buy the low risk buy and just take off at a high from the left side. The important part is when price is on the buy side of the curve, it's going to attack the buy side. Notice how it's only going beneath these old lows in here for smart money to buy them up and start to attack buy stops. That's a characteristic of price being in a buy program.
There's an algorithm that delivers efficient market delivery. You can argue with me all you want. You're not going to convince me I know it. If you go into price action with that market efficiency paradigm perception of looking for this characteristic in price, I promise you, you will never look at charts the same way again. It'll unlock a lot of things. Remember the movie The Matrix? And Neo finally sees the Matrix as it really is in binary code, ones and zeros. He has clarity. Well, that same event, as silly as it may sound, ends up happening when you look at price action, when you start looking at it from this perspective.